expect from the market today? Where we kind of head, what will take our lead from?
Well, we did see a positive lead from the US market on Friday with a rise of 0.7%. SPI futures have been pointing to a positive open with a rise of 0.3%. But no doubt that we are going to see jitters. It's a very big week. It's the countdown till the end of financial year. So we could see tax-related selling coming into play this week, as well as portfolio managers looking to reshuffle their portfolios before end of year. So a bit of window dressing as well. But no doubt there will be a focus on Europe with the EU summit later on this week on the 25th, 26th of June. So that's really going to be at the forefront of investors' minds, especially seeing that it looks like Greece is trying to renegotiate some of the bailout terms. So altogether, it does look like investors may be jittery, and no doubt that it's going to be more than that positive lead from Wall Street. We're going to see end of financial related transactions going through, as well as that focus on Europe.
If the underlying earnings aren't that far off expectations, as Peter said, but they are cutting costs, how do you think the market reacts to that today?
Well, if we have a look at Perpetual, I guess what it's struggling with is the fact that we have seen revenues declining while costs have been rising for Perpetual over the last few years. And the key here is fund inflows in it. And in FY12, we've seen fund outflows. Now, part of that was because stock picker John Savoya departed in December last year. And the other part is just a general market weakness. Of course, this comes at a time when Perpetual is also under a cloud of takeover speculation because of its lack of strategic direction. And I guess that's what today is all about. It's all about finding that strategic direction again. And if we have a look at the catch cry of this announcement coming through from Perpetual this morning, it's simplify, refocus and grow. So if we have a look at some of the initiatives, we're expecting to see some significant cost savings. They're expecting to see $40 million. That's on an annualised basis by FY15. They're also selling off their mortgage lending business. So it looks like they're simplifying their business to just concentrate really on their core business. And they've also decreased executive remuneration. The non-executive directors were seeing costs down by about 25% there. The chairman seeing his remuneration cut by about 42%. If we have a look at, more importantly, how Perpetual is to grow, I guess part of it would help if the market was to see another prolonged uptick. But they are looking at refocusing in on high net value clients. They're also looking at trying to distribute some of their products on other platforms like Colonial First State. And they're also looking at cross-selling products, especially their risk products. But altogether, if we have a look at this announcement, it was expected by the market there's going to be significant costs coming into FY12 because of the restructure. So if we have a look at the statutory profit, they are expecting $22 to $29 million. And I guess we'll have to wait and see whether some of these initiatives are going to meet the seal of approval by the market. But really the focus for Perpetual at the moment should be those cost savings while the market is so weak, and just waiting for the cyclical upturn of the market, which should start to help revenues.
Let's go to you, Julia. Headed in the other direction today, Billabong shares. They've completed the capital raising. Tell us the details.
We're expecting to see a big drop in Billabong shares when they come online. They will be trading ex-entitlement with that heavily discounted and also heavily dilutive capital raising that was announced last week. We also saw that profit downgrade come through, no dividends to be paid in the second half of the financial year, as well as the first half of FY13. So altogether, the market's going to be absorbing all this information into the share price. The share price last traded at $1.83, including that capital raising and the dilutive nature of it. The theoretical price of Billabong today is $1.45. But if we have a look at what's likely to occur, well, there's a lot of negative sentiment in the stock. You have to take into account also that profit downgrade, that no dividends are going to be paid over the next couple of halves. So you'll probably see Billabong trading in the range of about $1.20 to $1.40 when it comes back online today. Of course, we've seen brokers absolutely slashing their expectations. 12-month targets by most brokers have been slashed by about 24% on the optimistic side to 68% on the pessimistic side. We have a look at who's the most optimistic at the moment. RBS remains the most optimistic with a target price over the next 12 months of $1.85 and a buy recommendation. But on the pessimistic side, Credit Suisse is the most pessimistic. It's cut its target down to just 41 cents with an underperform rating. So no doubt Billabong is going to be the worst performer on the market today. We are expecting to see a big drop. The theoretical price is $1.45, but we are expecting it to trade in a range of about $1.20 to $1.40.